Good afternoon, everybody. Can everybody see my screen and hear me? Somebody just wants to type in a quick yes or a Y. Perfect. Thank you, Bill. All right, let's go ahead and get started. Again, the purpose of the Beginner Circle webinar is to help new members get acclimated, ask some beginner questions about Elliott Wave in general, kind of get their bearings in terms of where we see things at larger degrees, because I know during the day in the middle of the week things get can sometimes get into the weeds in terms of smaller degree wave counting, particularly on the indexes and futures. And a lot of times we might lose sight of the larger perspective. So that's one of the things that I like to show. And it also helps us kind of talk about the different degrees and the fractal nature of Elliott wave. So we're looking at things and seeing how each piece fits in as being a smaller version of the larger one, and how that structure builds on it. So this is the daily view, a daily chart that goes all the way back to, I can frame it nicely with maybe about 76.4% of the price window taken up by actual price history, going back to 2018, showing the primary wave 3 top that hit our major topping zone there, shows the big higher expanded flat with the high B wave into February 2020, and then the sharp drop on COVID into the March 2020 lows, and then our primary degree fifth wave off of that. What I don't show on this chart is the larger potential degree that we've talked about before. So I want to jump over to that. I have that on my tab that I have labeled really, really macro. I do not have the price data going all the way back to the 1800s or even earlier than that Garrett does on a chart that he's shown for the market. But I think that starts, I think the only thing that really helps you see, and I'll see if I can get a copy of that from him and post it in the thread later, is relatively speaking, you see how this wave 2 drop from the 1930s corresponds in degree to this wave 4 that we're expecting. And we've talked about that a lot before, where wave 4s in Elliott wave should alternate in at least one of several ways. That can be a time factor, that can be a severity or an amount of consolidation, that can be an Elliott wave structure, or some combination of those. So back here in the 1929 crash to the 1930s, where the rest of that wave 2 filled out, of the super cycle degree wave 2, and that was a wave 2 that started back in the 1860s at the end of the Civil War. That this was a very, very sharp, abrupt zigzag drop. Had a tremendous crash, the 1929 crash, and then a bounce, and then it chopped down into the low in the 1930s. So the entire super cycle degree wave 2 took much less than a decade, pretty much only about half of a decade. And it was a very, very deep correction, and also very, very sharp. So when we start talking about our super cycle degree wave 4, we can look for a couple of things. We can look for that to hold a more normal, or possibly even a more shallow consolidation relative to the size of wave 2, how deep that was. So possibly holding, I'm going to go back into the 2-week here, where we can see relative to the 2009 lows, which is the subwave 4 at one prior degree, that could be one of the target regions. So somewhere in between the top of wave 3 from the .com peak into the housing market financial crisis crash of 2008, 2009. So somewhere in there is one of the target regions of support, but also, since we have an extended fifth wave, that cycle degree wave 5, into we're currently trying to look for a possible top, and we'll look at the smaller degree soon. The wave 2 region of that is also a possible target. So that can give us relatively speaking, based on fib-wise, a much higher corrective consolidation. We can also see it take a lot longer to fill out and moving more sideways over time, as opposed to being a sharp drop that only takes 5 to 10 years. It could take the better part of 2 decades to fill out. And we could also see it fill out more as a wider flat, possibly even an expanded flat, similar to what we just looked at here in late 2020 in the primary wave 4, where that X wave or B wave, depending on how you want to count the subwaves in the COVID drop, where that B wave or X wave made a substantial higher high. Some things do count better with the primary wave 3 extended into that top, but the market itself and a lot of things clearly look like only 3 waves up off of that 2018 lows as a B wave, even though it's pretty high. And also we got a nominal higher high in 2007 as the primary degree B wave inside that cycle wave 4. So those are some good examples and maybe some evidence that we can use for the potential that possibly this cycle degree B wave might make a higher high. And some of you who might have seen Garrett and I present on sector rotation for the Money Show recently, and also fill in for Avi, we've talked a little bit about the difference of where the NASDAQ did not make a lower low here. So the NASDAQ counts better as a cycle 1, 2, and then this is cycle 3, and it needs a 4th, and then maybe a 5th wave up to higher highs, much higher highs, and that could coincide with helping drag the B wave up here to a higher high over the top that we're making now. So I just wanted to kind of give that for the much larger degree perspective. Now, when we zoom in, we can talk a little bit about the structure. We can see at the primary degree inside of the move off of 2009 until now, we can see 5 waves up that easily counts complete. And so now when we zoom in, not only do we have a possible 5 waves up as a 5th wave off of 2020 that can be completing, we have a possible 5 waves up as the intermediate degree 5th wave off of the October 2022 lows that can be completing. And now we're going to zoom in on the structure so that we can see at that smaller degree inside the 5th wave of this parentheses wave 5, where the possible room for extension is, or if we need to start considering that that is getting closer to being complete. So for that, I'm going to go to the What's the Frequency Kenneth tab. And here we can see just that parentheses wave 5 structure off of the October 2022 lows. We have an initial ABC move up, and then this expanded flat. On some charts, I've actually counted this as the wave 2 and this is the A, B, and C. It gives you a little bit longer of a third, but the fibs are roughly the same because either this is a higher low and then we have an extension here, or you have a little bit deeper of a drop, and you're still getting to about the 1, 2, 3, 6 for that wave 3, and it still can count as only 3 waves up. And then inside here, we can either count this as the A wave and then squeeze in a diagonal for the C wave off of here, or we can count a little bit of a smaller A wave, which came up into what was 3 waves up as that possible wave 2 back in early November. But when it started to creep past it, we needed to start looking for breaks of out to higher high. So this can be the 1, 2, 3, 4, and working on an ending diagonal for the 5th wave, the minuet or sub-minuet, actually, no, that's minuet, sorry, the minuet 5th wave of the circle C wave inside that 5th of the parentheses wave 5. Norbert, I'll get to your question in just a second. So now we can zoom in a little bit more on just this 5th wave off of the November low. We have initial ABC up for the A wave, and then we have that 5 up, 3 down is the 1, 2. We can count 1, 2, 3, 4, and 5 up for this wave 5 or wave 3, and then an expanded flat for this wave 4. And then in this ending diagonal, we can be holding a 4th wave at the 5180s and allow for at least one more push up into the 5300s, maybe tagging this fib up here at 5336. But we do have a nominal higher high. It is possible to count this as the 4-5 complete. But I think as long as we're going to hold the 5180s, there's a good chance that we get another blow off top extension to a nominal higher high. So now that we have that in mind, there is also one more opportunity to hold. If that breaks, could get more of a C wave, an A, B, and a C wave down into the 5100 region as an alt version of this wave 4. So this would be an extension of the third to here or here, and then the fourth wave, and then could try for that fifth wave up. But I think better it tries to hold here and get one more push higher. And then the only other thing that we've talked about is that instead of this being all of wave 3, this entire thing could be an A, B, and a C wave up for wave 3. And then we could get another 4 and then a fifth wave up in that parentheses wave 5. So the structure that we'd be expecting, because we're looking at a new major top forming, so we're going to have to start small with smaller degree ABC moves, because we know we're looking for a very, very large ABC move to the downside. That ABC move to the downside is very likely going to be the A wave of that should be a primary degree ABC. And primary A here can easily start with an intermediate degree ABC. And then when we go back to this chart, we can see that intermediate degree parentheses A wave should easily start as a minor degree ABC. And then that can be a minute degree ABC for that A wave. So that ABC for an A wave could be the possible green wave 4 setting up for another extension. So we would be looking to trade long, at least even just for a bounce in some capacity. That doesn't mean get out of all of your shorts. That doesn't mean go 100% or leverage long in your portfolio, but it makes this a very good risk reward scalp to trade for a bounce there, and then look at the nature of that bounce to possibly set up for a new round of shorts for a C wave down. Norbert asked the question, if we are expecting a major downturn soon, but showing many stocks that are in an upturn, what should last more than a month to come? So you might be talking about some of the recent wave setups in stock waves. There are both bullish and bearish wave setups there. We're always looking for things that look like they have potential to benefit from rotation or to continue in a strong sentiment trend that might buck whatever the market's doing. But also, and we say each chart on its own, but we've also cautioned and said, if we do actually start to break support in a more severe way, then there's some pretty big red days. Those are likely to start to drag things under ideal or reliable support levels, and maybe even force some recent wave setups to invalidate. So be very, very mindful of key support levels on anything that you're trading, and just don't be too married to any particular outcome. Wanted to look at this. This is my micro counts tab. So the consolidation that we drop down to here, it is possible to squeeze in 5 waves up for that ending diagonal that we were just looking at as the parentheses lowercase Roman numeral wave 5 of the fifth of the C wave of the fifth of the fifth of the fifth of that cycle degree wave 5. But here on the S&P itself looks a little bit better as the wider flat here for that wave 4, which I have in green on the ES chart, and to try for one more high. That really makes the trend lines very, very expanded on the ES chart, even if I move the 3 up to here, but giving it the benefit of the doubt because the S&P counts a little bit better that way. In terms of other index charts that might argue a little bit more strongly for an attempt at one more high, I think the Dow puts forth a pretty good argument for that, where in a fifth wave of the C wave of a wave 5, because the Dow counts, well, let's zoom out a little bit here. So the Dow differs only in as much as this same primary wave 5 off of the March 2020 lows counts better in the Dow as an ending diagonal. And so that means that all of the subwaves, not just waves 2s and wave 4, are ABC moves. So that means an ABC up for wave 1, an ABC up for wave 3, and an ABC for wave 5. In that C wave for wave 5, which should be the very final move of the 5th of the primary wave 5, that we are tracking as 1, 2, 3, 4, and in the 5th wave of that, can still get a 5th wave up of that ending diagonal. So as long as we hold the 3900 region of support, and ideally the low that we made today at 39,300, we should get an ABC move up towards the 40,600 region as one more high in the NASDAQ. Girao asks, is it prudent to assume that the rally in the S&P 500 can be labeled as a complete impulsive pattern at 52.64, the high last Thursday? If so, I do think that you could certainly, that's what the red here is indicating. It is possible to count a small 4 and 5 squeezed in there. This is on the Dow. And the S&P as well, and what we just looked at it on the ES futures even more so. So that is certainly a risk. We have an initial move down that can count as 5 waves on the Dow, a little bit more. It looks more like only 3 waves in the ES. So even if that is the start of a drop, it would be pretty normal to get at least a corrective bounce. And there are certainly plenty of individual stocks and some sectors that argue more strongly as though a top has been hit. But I think it's important to understand that at the larger degrees, absolutely they can count complete. And so we're looking for some key indications of a break of support or a clear move down, corrective retrace, and then a more aggressive start to the next move down to start to signify a more significant top. But until then, there is room for more extension. So I have to, leave some room for that and not get too aggressive on the downside because this can get even further extension. There's also this 1618 yellow fib at the primary degree up here at the 41,000 region on the Dow. Next, moving over to the NASDAQ, can also allow for this to be a 4th wave. We did make a nominal higher high, so this as the yellow ABC could still be a wider flat as an ABC, but I think it probably counts a little bit better now as this, allowing for one more push up, very similar to what we were just looking at on the Dow and the ES in that ending diagonal for the 5th of the C wave of the 5th, very similar to what we were just looking at on ES and the Dow. And then on the Russell, RTY, the Russell also absolutely does not need any higher, can very easily count complete as the B wave at a significantly divergent top and only a 618 retrace of the initial move down that it got from 2022 highs. But if it holds the low that it made at 2069, then it can try for 2200 again as an ABC up for that wave 5 off of a slightly more extended ending diagonal there. So there is confluence that it came up just a little bit short of. This move down can count as a corrective retrace. So as long as it's going to hold that, then there is a path to get another high up there towards 2200. We also often take a look at the RSP. RSP, I think, counts very similar to the Dow, where this can be a 4th wave and an ABC up for wave 5, where it's an ending diagonal for that primary wave 5. It also only got a nominal higher high over the primary wave 5 top that we had that we were concerned about in 2022. And so it can still be the B wave of a wider flat. This does not have the same history that we have on the S&P, so it doesn't need to be a lower high for this B wave. It can just be 5 waves up and getting an expanded flat that holds and maybe running more in line with something like a NASDAQ or something else that's going to get a bigger bounce after that. But I think just as easily counts as the purple wave 5 of 5. And inside that final move, so again, we have the 5th wave of C, and we have an A, B, and a C wave up for that because it started with a corrective bounce, and then this counts better as 3 waves up. So an A, B, C up for that wave 5 easily counts complete. Could get some further extension, but there's not as much of a clear path for that in the RSP. All right, any other questions on the broad indexes before we jump over and start talking about energy and metals and other things? Nothing? All right, let's move on to oil. All right, so oil, Garrett and I are counting very similar to the way we're counting a lot of energy that we're tracking in stock waves, and that is as though this is a 4th wave that ideally held back here in May 2023, and we're working on an ABC up for a 5th wave, which ideally gets at least nominally higher than the parentheses wave 3. It's going to be cutting it close. Even if this is just the 1-2 start to that C wave of the wave 5. But that is what we would like to see. And we do know that sometimes the 5th waves, this final move in commodities, can sometimes get a little bit aggressive. So that 5th wave here could easily get a little bit more of like a blow off top to get towards the 120s and then be nominally higher than this wave 3. Off of the low, which was very deep for a B wave, but did hold, we can count 3 waves up, trying to complete as just wave 1 in an ending diagonal. If we continue much higher though, then it becomes more likely that this is further along in a more muted move. And some of the energy stocks may still fill out as either a bigger A wave and then a B and a C wave for this wave 5, or just getting more of the C wave now. But that's this yellow 3 is if we get further extension, then instead of looking for a wave 2 and then 3, 4, 5 all the way up into the 120s, we start to just look for more of a 4th and a 5th wave up for what would look more like a measured move, and possibly something either more bearish for oil itself, or maybe that's just a larger version of this A wave, slightly larger version of this A wave, and getting another B wave and a C wave up for that 5th wave from there. USO, I think, counts very, very similar. Again, got a little bit of extension here in what I wanted to see start to form that wave 2, but that is just going to help get us higher up for the rest of that C wave. But the issue is if we get more extension, then it becomes more likely that this is further along in this C wave, especially because 91 in USO is the measured move. So it might just get a 4th and a 5th wave up towards that 91, 92 region, and that's it, instead of getting into the 100s after getting a wave 2 and then a 3, 4, 5. I actually have not looked at natural gas in a while, but we'll take a, nope, that's not the right chart. Try that natural gas, and then we'll switch over to the back adjusted. Nope, it's not gonna let me do it. There we go. Oh, crud. There we go. No reliable bottom yet. It's so annoying how the back adjusted everything moves again, like the old days, but I think we have to use the adjusted one because of where interest rates are. We had this nice ABC down, couldn't hold a possible bullish start off of that low. And now we just keep leaking lower and failing to hold anything. So there's really nothing reliable. It seems like it's at an extreme low. Can easily count this as 5 waves down now. And even 1, 2, 3, 4, 5 off of this spike, which could be an A, B, C for the 5th wave. Even though this looks like an impulse, could count this as diagonal to the downside, or just this is 3 and 4, and this is a muted 5th wave. So it could at least be due for a bounce into the 3s, but there's absolutely nothing really reliable here. Maybe you could call that a micro 5 up, so off of $1.69 as support, but pretty risky trade with not a lot of clarity there in natural gas. I'm going to skip over XLE and XOP because we don't usually talk about those anyway, and we'll go to gold and silver. Before I look at gold futures, I want to look at GLD because I think this might be one of the cases of the tail wagging the dog. We had talked about this a little bit before, that there was a huge spike up in the gold futures on Sunday night, December 4th, that did not reflect in any of the cash instruments that trade in regular trading hours. So that move up got all the way effectively to the 764 and counted as all of this A wave. And we were looking for this as the B wave and wanted to see wave 1, 5 waves up to about here is wave 1 of the C wave in gold futures. But we were looking at the potential on GLD of just being 1 degree behind and getting an ABC up into this region as an A wave. Now it's getting an extension and it is getting close to a 100% fib, which one of the things we do have to worry about is that if you have an ABC up to a 100% fib in already a diagonal structure, that could be all of the third, not just the A wave. We're going to continue to give this the benefit of the doubt because so much of what we see in the metals, miners, and agriculture service is very, very bullish long term. But a lot of those things do clearly look like 5 waves up off of the February low and due for some consolidation. At this point, we do have to look for a possible B wave consolidation, which could hold the minimum reliable levels for it being a B wave. But we do need to see something at least relative in size to the consolidation that we got back here in December to February as this B wave, and should be a little bit larger than that, at least in terms of time. So that is something to be aware of, that the ideal wave count has this getting a B wave consolidation, and then it can head all the way clear up towards the 240s as the C wave of 3. Whereas if we just get further extension towards 217.50, then it starts to get more concerning that that is possibly all of the third. And we don't want to see that. We want this move to take a lot longer to fill out. So with that in mind, I want to go over to the futures. We'll zoom back out a little bit here. And I have this pink label here, was the alt that I was considering, but with the extension, I think it is far more probable, because this is now more clearly a measured move, and we can just discount some of the spike, that this is ABC up for the larger A wave, and we should be getting more of a B wave consolidation, at least as a nice wide little flat here that can take us into maybe the early part of the summer. It could be a lot quicker than that, but if it's going to be quicker than that, it needs to cover a little bit more ground, so it might be sharper. So I would rather see a decent move down to maybe the 2200s, and then a bounce, a corrected bounce that takes a while to fill out for a B wave, and then another choppy move down into just under the 2180 to 2160 region would be about perfect. But we have to allow for what we would normally expect based on Elliott wave rules and guidelines, and then make adjustments if we start to not get that. So I'm going to go ahead and move this on this chart so we can see it in the larger time frame and make that the primary. We'll just move this over here as an alt that we had been considering then, but I think that this is too big now to be wave 1 of C. Let's go out to, there we go. So here you get a sense of the entire diagonal. And the issue now is that if we keep extending, we're already at exactly at the 100% fib now for the third wave. So if we get any further extension, it starts to become more probable that that is finishing up all of the third in a smaller version of the third than we wanted to see, than being the third of just the A wave of a much bigger wave 3. So now, if we get a pretty normal size B wave into the 382 to 50% to 618 into the 2100s, then a measured move C wave can take us up into close to the 2600 region. And we might want to just tag that as a nice round price level for gold. Then our fourth wave here could hold a little bit higher. And then we'd be looking for a final fifth wave up, which could get even further extension at that point, well into the 2700s. Because as we know, for some commodities, those fifth waves can tend to extend. Robert, Bitcoin is covered in Ryan's service. It's not something that we normally cover in the beginner circle webinar. Before I go to, actually, let's look at GDX first, and then we'll talk about silver. So we've talked about the larger diagonal structure. So in this primary wave 3, because it's a diagonal off of the March 2020 low, we're looking for this intermediate degree ABC move up. We got our solid 5 waves up as the minor degree wave 1 into the May 2023 high. We've held a 618 retrace. We can still even count this as 5 waves up for the circle wave 1 and barely hung on to a nominal higher low as the wave 2. And this new 5 waves up since February can be wave 1 of the third of that parentheses C wave. The alternative, there's 2 alternatives that I've discussed in the metals, miners, and agriculture service. One is that this was an alt wave 2 here. There are some things that did make a slight lower low, so they are restarting this circle wave 1 off of that February low and have reached the normal resistance there. In fact, wave setups that we posted back here in November for GDX stopped shy of its first resistance level that we wanted to see for 5 waves up as this wave 1 back in December, but it was just hitting it today. So that is due for an update. So we want to see it hold a normal retrace, or at least hold something that we can reliably count as a minimal retrace, even if it's a little bit shy of normal. But some consolidation here should be allowed for. The other concern, though, that I have is that because this held where it did, and this doesn't clearly look like 5 waves up, and this is now a proportionate move, almost identical in size to this move off of September or October, is that this can be an ABC flat. And that ABC flat could imply another attempt at the 24 to 22 level, which 24.34 is the 764 retrace. that could be the alt version, even further alt wider version of this wave 2, but you do run into the risk of a measured move from here down, could go under this 2434 level, and then you start to worry about breaking this low. So that's where seeing a reliable retrace becomes very, very important here. All right, let's quickly look at the smaller degree. So smaller degree off of the February low, this was nominally lower than February 13, 14. So we count a small 1, 2, 3, 4, and then we're an extended fifth wave up, which we can count as completing. Could get some little nominal extension higher, or even a sub-micro 4 and then a micro and a sub-micro 5 inside this. But this is not the clearest 5 up, and it is possible that it's completing as an ABC for 3 and an ABC for wave 5. But normal fib support stretches from the low 30s into the low 28s. And if that is a nice wide high flat consolidation, even if it's shy of that 382, I'll be perfectly happy with that. But it should be bigger than this consolidation and at least give us something that we can say, all right, that is workable as a wave 2, even though it didn't come down all the way into the more reliable fib support region. Let's take a quick look at silver. Silver, I think we're also giving it the benefit of the doubt before as being a wave 1 and working on a B wave and needing a wave 2, a C wave of wave 2. But this stretch makes it far more probable that this is a bigger A, B, C up here for the larger A wave. So at this point, it might want to continue to try and stretch towards 2820s. But it looks more like this is, instead of being just wave 1 of a much bigger A wave, that this counts this way. We'll go ahead and change it on here. I changed it on the SLV chart earlier. And this was 3, 4, and now this is finishing up the 5 of C of that A wave. So then our normal fibs for this B wave are going to come in. The 25 to 2350 region is normal fib support. Obviously, that's going to change a little bit if this stretches all the way up to 2820. But looking at the subwaves inside this fifth, it could still be just 1, 2, 3 and get a fourth and a fifth wave up towards that 76.4% fib. We'll give it room for that. And so from there, the normal fib zone is going to be 2520s down to 2360s. And again, perfectly happy for this to hold a higher, wider, and maybe even expanded flat instead of getting deeper into that fib region, but do need something that we can reliably call an ABC structure for that B wave. There really should be larger in some way than this degree B wave, if that makes sense. So this was pretty big, so just a wider flat that takes a little bit more time would be great. I certainly don't want to see it so deep. But again, you know, this clearly looks like 5 waves up completing right into measured move resistance. So need to be careful there. You know, there's some chances that this was all of a small wave 1 and that this was all of a very small wave 2 and this is a breakout. But the more simple explanation, I think it's prudent to allow for that B wave. And then we'll quickly look at copper. I know we don't usually look at this, but it's playing very, very nicely. It just hit our target for a recent wave setup in stock waves that we took from down here as the 1, 2 start to the C wave up. We got a 3, 4, and now we're at the 1, 2, 3, 6 for that C wave. I think the A wave, the C wave of the A wave can stretch a little bit higher. So would love to see a micro 4, 5 here. up towards 428, 427.90s. But that also will be due for a B wave consolidation after that, and this is inside a larger third. Yeah, we're going to go from here. Let's move on to first, before we talk about TLT, I want to talk about the Treasury, the 30-year Treasury futures first. So we had a potential for this to be this ABC down here to the 382 retrace, just under the 382 retrace, could have been all of our B wave. So we were looking for at least a B wave bounce, if not the possible 5 waves up for this circle wave 1 off of this low. But when we broke down here deeper and then couldn't hold on to this nominal lower low here or nominal higher low here, it makes it more probable that we are in the orange C wave down for that deeper B wave. So that can be targeting the 114 to 113 region, which is the C wave is a 100% measured move from the A wave here, and also the 618 retrace of the B wave. So zooming in on that structure, ideally we're getting a B wave bounce inside the third. So this orange circle C wave is a ending diagonal. So ABC for wave 1 and ABC for wave 3, a higher than normal bounce for fourth wave that can overlap with the top of wave 1, and then an ABC drop down into that 114 region would be just about perfect. So that is what I would like to see play out. It is possible that this is an A, this is a B wave, and we try to get higher than this B wave bounce for a wider flat for this orange wave B, which is what we were initially looking for. But we'll see if that starts to get past this 119 resistance that we're looking for the B wave bounce. If we see a clear micro ABC up into that 119 region, then we should be looking for a drop down towards the 115s and then the next bounce. On TLT, that looks much the same. So it didn't hold as the possible 1-2 of a leading diagonal. So instead, that's our B wave. And we didn't hold that support. So we'll move this B wave down to here as the orange B wave was indicating there. And we'll go ahead and add those subwaves and move all of this stuff for the possible C wave start further over to the side here and ignore it. So that's our orange ABC and then the ending diagonal inside that. With this ideally bouncing more, let's see, the 119 region on the ZB futures roughly translates to 93s, 94 there. So it doesn't have to get that high for the B wave, but that's going to be the clear, that 94 level. If it gets past that, it's probably at least trying for that wider flat for the circle B wave. This is not a reliable bottom though. So we have lower lows and we don't have a clearly completed ABC retrace for this B wave now. So why is that looking weird? There we go. So we do need to see more of this orange C wave fill out or a very, very clear impulsive 5 up, 3 down hold to start to consider a new start to the C wave. Yeah, we do cover platinum pretty regularly in the Metals, Miners, and Agriculture service. It has not actually invalidated some bullish potential, but this move up as a start of the C wave, we've talked about a lot, was clearly only 3 waves up. And then it got a move down, which did not look like a clearly corrective retrace, but it did hold a nominally higher low. There is still some immediate downside risk, and this B wave could get a little bit bigger. This could be the A here and an A, B, C wave up for this yellow B wave. But there is short-term risk of more of a drop under 800. And that even, for that to be all of this larger wave 2 in platinum, relies on not only this as a WXY for the wave 2, but also a WX and then an ABC for the Y wave inside that Y wave. So you're really, if you're trying to get this to hold as a bottom, especially if you're not going to hold the green AB as already the start to that parentheses A wave of the primary wave 3 already, which does not look very strong right here, then you're relying on more the 618 retrace and a very, very wide complex corrective pattern. A WXY inside a Y wave by itself is not a very reliable pattern. So that I also have this orange wave 2 down here, where this might be, instead of a WX and an ABC for a Y wave, it could be an A, B, and fill out 5 waves down as a C wave under 700. So that's a big risk on platinum. What else are we missing? Let's look a quick look at the dollar. Got a little bit higher for this wave 2, but did not invalidate the prior top from February as a possible 1-2 start to this larger C wave down. So that could help certain commodities that are priced in dollar have a little bit more leeway to try and head to the upside. But it did come very, very close to invalidating. So certainly any move over that high would get concerning and might not stop as just an alt version of this wave 2. It might need to continue up and be an alt version of this B wave and try for the 109 region, which we definitely not want to see. So really would like to see that 104.8 level stick on the dollar. All right, anything else that I'm leaving out that we normally cover? I think we touched on everything. So I will go ahead and get this uploaded for you guys, and I will see you tomorrow. Have a great evening.